Hello and welcome to this video. I am Devash Vakil from HDFC Securities and this is our fortnightly market outlook video. So the agenda for this webinar is that first my colleagues Subhash and Nanish will take you through charts and derivative data and share their market outlook. Then I will come in and share about key developments over the last fortnight and last 1 month, the indices movements, and we'll try to make sense of all of it. So first, let us hear from Subhash and then Nandish. Over to you, Subhash.
Hello everyone, this is Subhash, Senior Technical and Derivative Analyst at HDFC Securities. So today I'll be giving a technical view on the markets for the next 1 to 2 weeks. Markets surged higher this week to close at a new 6-month high. Though there was a minor sell-off during the week, the Nifty has recovered well from the lows to end the week near the highs. 14-day RSI 2 was in rising mode, though it eased a bit towards the end of the week. If we look at the 60-minute intraday chart, we can see that the Nifty has respected the recent supports of 17,951, and towards the end of the week, it broke out of a trading range, thereby ensuring that the short-term trend remains up. Market breadth was also positive in 4 out of the 5 sessions of the week. So the intermediate trend is now firmly up, as Nifty has been consistently making higher tops and higher bottoms over the last few months, and has also convincingly broken out of a downward sloping trend line that has held down the highs of 2021 and 22. If we look at the weekly charts, we can also see that the Nifty has made a higher bottom near the 20 and 50 week simple moving average. These levels correspond to the 16,747 levels, indicating that this is a strong support for the intermediate term. On the daily charts, we can see that the Nifty has broken out of the downward sloping trend line and is also above the key moving averages like the 20-day and 50-day SMA. 14-day RSI also is in rising mode and not overbought. And on the weekly chart, as I said earlier, we have made a higher bottom and held above the 50-week SMA. And it has now also broken out of the downward sloping trend line, connecting the highs of 2021 and 22. Coming to the sectors, all the sectors ended higher this week. The top gainers and outperformers were the Nifty Metal, Pharma, PSU Bank, and Media indices. Indices that gained the least were the Nifty Auto, Bank Nifty, FMCG, and IT indices. On the daily charts, we can see that most of the indices are in short-term uptrend and could therefore rise more in the near term. So sectors that are leading from the front are metals, energy, infra, and PSU Bank indices. The PSU Bank index, in fact, closed at a new 52-week high this week and could therefore continue to outperform in the near term. As you can see in the charts here, the PSU Bank has closed at a new 52-week high. It has also taken out the highs of 2019 and 18. So that is a good sign for the index. Metal sector has also broken out of the recent trading range and also taken out the previous intermediate highs. RSI is still not very overbought, suggesting there is hope for more upsides. In the energy sector, we have made a double bottom and moved up and also closed above the key moving averages. So that is also a positive signal. Coming to the outlook, Nifty remains in an intermediate uptrend. And with the short-term uptrend too picking up momentum, we could see more upsides in the near term. Upside targets are the current lifetime highs of 18,604 once the immediate resistance of 18,351 is taken out. So we expect buying across many sectors to help push the Nifty index higher in the coming 1 to 2 weeks. Broad market indices like Nifty mid cap and small cap have been relatively quiet of late. So we expect these broad market indices to pick up momentum very soon. And one could look at stock specific opportunities in these segments. So we expect the markets to rise more in the near term as the short-term trend is up. Upside targets for the Nifty are at 18,604 once the resistance of 18,351 is taken out. With most of the sectoral indices in short-term uptrends, This increases the probability of a further up move in the markets. Most of the global markets are also in uptrend, so that could also be a supporting factor for the Indian markets. The current short-term uptrend would reverse if the support of 17,800 is broken. In terms of strategy, we recommend a stock-specific approach by looking for stocks from outperforming sectors and showing relative strength. So that's all from my side. Thank you.
Good morning, friends. I am Nandish Shah, Technical and Derivative Analyst at HDFC Securities. Today, I am going to discuss how the market is looking from the derivative side. So let's straight away jump to the presentation. As you can see, we have seen long build-up in the Nifty future during the week, where we have seen 9% rise in the open interest, with Nifty rising by 1.9%. Long build-up is seen in the Bank Nifty future also, where we have seen massive 18% rise in the open interest, with Bank Nifty rising by 0.7%. Now coming to option data, amongst the Nifty weekly option, that is 10th November expiry, we have seen put writing at 17,800 to 18,000 levels, indicating 17,800 to 18,000 levels to act as a strong support going forward. On the other hand, Nifty is likely to find an immediate resistance in the vicinity of 18,500 to 18,600 levels, where calls have been written. So as you can see from the option distribution chart, we have seen call writing at 18,500 and 18,600 levels, while we have seen put writing at 17,800 to 18,000 levels, which are going to act as a strong support going forward. So now coming to FIs data, we have seen long build up by the FIs in the index future segment during the last week, where their net bought worth rupees 619 crore, with their open interest going up by 23,600 contracts. FI's net long to short ratio in the index future has risen to 1.38 levels on Friday as against 1.30 levels last week. This is the highest long to short ratio in the index future segment by FI since August 2022. Moreover, their long to short ratio is above 1 since the beginning of the November series, which augurs well for the markets. So as you can see from this chart, FI's long to short ratio in the index future, which was around 0.2, 0.3 levels during the month of September, now has reached to 1.40 odd levels, and since the beginning of the November series, it is above 1, which indicates that FIs are creating longs and they are still holding their longs, which augurs well for the market. So coming to outlook for the Nifty, considering long build up in the Nifty futures, steady put call ratio on the back of put writing at 17,800 to 18,000 levels, long build up by the FIs in the index future segment, FIs long to short ratio above 1 in the index future segment, which indicates that FIs are currently holding their longs, and also their build up of long positions in the index option segment, where the net bought 85,000 contracts of calls as compared to 40,000 contracts of index puts. This indicates that downside is limited in the market and one should remain optimistic for the market for the coming days. Therefore, our advice is to remain bullish and accumulate longs with the stop loss of 17,800 levels. On the higher side, we are expecting Nifty to reach to an all-time high levels of 18,600 levels in the coming weeks. Now coming to Bank Nifty, as I discussed earlier, we have seen aggressive long build-up in the Bank Nifty futures during the week, put trading at 40,500 to 41,000 levels. Long build up by the FIs in the index future segment. We believe that in Bank Nifty also downside is limited. Therefore, our advice is to remain bullish with the stop loss of 40,500 levels. On the higher side, 41,500 to 41,800 level to act as an immediate resistance, where we have seen call writing. Any close above 41,800 level would result into short covering, which might push Bank Nifty to even 43,000 to 43,500 levels in the coming week. This is all I want to share from the derivative side.
Now let's look at key developments over the last fortnight. So on Wednesday, the US Fed, as expected, increased the interest rate by 75 basis points, or a 3/4 of a percentage point, and it was the fourth time in a row. Now, from almost zero, the interest rates have been hiked by 75 basis points 4 times, and now we are at 4%, which is unprecedented in the history of US economy. These higher interest rates have started taking toll on the economy. The earnings season has been disappointing. So the earnings from Facebook parent Meta, Amazon and Microsoft has led to a lot of disappointment in the markets. Amazon and in fact now Twitter has also announced that either they are pausing the workforce hiring or they are even firing people. And this is a disturbing trend in the US economy. So let's look at the important charts. So this is the most important chart, the dollar index. It topped out around 114 and now it is making a lower top, lower bottom. In fact, on a Friday, it has a decent fall and that is a good news for markets like India. The S&P 500 market, the regular viewers of this video series will know that we identified the bottom around 3500 and the market rallied one way to 3900. So this 400 point rise, we have a decent 200 point fall. Markets have found support now near 3700 and now it is rising back. So US market seems to have bottomed out. Same is the case with the Nasdaq. It is trying to find support near this 10,200 level range. This is not as strong as the S&P 500. Once it crosses 11,200, safely said that the Nasdaq has also bottomed out. Commodities are also rebounding back. On a Friday, we saw that the crude oil jumped and now Brent crude oil is back to 99. So this is a concern. If this were to go back to 130, it will start hurting Indian economy. The copper, which is considered as the barometer of strength of a global economy, it has been correcting, but now it is showing signs that it can rebound. Dr. Copper is now back to 3.68. We think that if economy is strengthening global economy, then it has a power to go beyond this 3.8 range, and that would be a positive sign. So now let's look at the indices. This is the movement for this table. On the left is for the last fortnight, and this tables on the right are about the last 1 month movement. So as you can see from this table, Nasdaq, Dow, and S&P had a varied movement. Nasdaq has been the weak, -6%. S&P has been flat, while Dow Jones has gone up by 7%. Similarly, Nasdaq has, after falling for a month, slight recovery in the percentages. Nasdaq is down only 3.5% for the last fortnight, more or less flat for S&P 500, and Dow Jones is up by 4%. Compared to that, if you see Indian markets, Sensex and Nifty are up by about 5%, mid cap is up by 2%, and small cap is up by 1.3%. So the larger stocks or the FNO stocks have had a short covering rally, while mid cap and small caps are consolidating after a great rally they had over the previous months. So what are the sectors which are contributing to the rally? So over the last 1 month, we see that PSU and metal have had the best performance. PSU stocks are up by 9%. Over the last fortnight, we see that the banking and IT and FMCG have been the underperformers, while metal, oil and gas, and capital goods are the top performers. So let's look at the economic calendar for the next 1 month. So we don't have much important economic releases coming out this month for the rest of the month. In fact, lots of holidays are there. 8th of November, India, Guru Nanak Jayanti holiday. 11th, Veterans Day holiday, Friday in US. 23rd and 24th are holidays in Japan and US, Thanksgiving holidays. One important data is on 21st of November where China will set the interest rates. They have been issuing the supportive policies. All the local governments are trying to come out with the policies which support the real estate market of China, and we expect that to continue in China. That will support commodities going forward. Okay, let's conclude. So global markets have rebounded. India is outperforming the global markets. Unless we have an accident, we think that the markets are headed to all-time highs. And banks are likely to lead the charge. And we have come out with two MTF recommendations based on the quarterly results which have come out and technical charts which we see. So you will receive reports on Bank of Baroda and SBI. These are the buying range and the targets. So those who want to benefit from this can look at Bank of Baroda and SBI in the MTF. That's all for this video. We hope you like this video and find the information provided useful. If you have any comments or suggestion, do reach out to us. Thank you.